Thank you, Governor, for taking time out to speak to ET now at a time when I think the economy must be taking up all your time and attention. So we really appreciate it because our viewers would really like to hear it as it is, and who better to hear it from the Governor. So with that, let me just start straight away by asking you, in the last monetary policy review, the MPC and the RBI reduced the GDP estimate to 6.9%, very marginally. Since then, we've seen that the numbers for the last quarter came in much lower. So in hindsight, how would you look at GDP now? Where would you put the number right now?
You see, particularly the first quarter number came as a surprise. In fact, I think almost everybody outside people had projected about, we had projected 5.8 for Q1 and all others had projected 5.5 or around that. So the Q1 GDP came as a big surprise, and we are also examining it internally. What exactly, where did we miss out on something? If you look at the PMI numbers, in June they were better, there was an improvement. Now July it has come down, the July data was not available at that time.
So are you as confident about a recovery in the second half?
No, I'll just complete briefly. So very briefly I will just explain. So we are now examining the GDP much more closely. We were doing it a close analysis, we were doing earlier also. For example, the inflation forecasting, now we are almost on the dot, and the margin of error has considerably come down compared to the earlier months or years. In GDP also we are examining where we need to improve and come as close. But I must say that the first quarter number, the PMI gave a different picture. There were conflicting signals which were coming up, but we are looking at possible areas of improvement.
Are you as hopeful of a recovery in the second half as you seem to be at the time August?
You see, recovery, I don't want to again give a timeline. Recovery again depends on what, obviously you would, I take it that you are implying that when the growth rates will sort of
will they look as much?
So I can't, I can't, and I would not like to, particularly I would not like to say when the recovery will take place. We have to see the Q2 numbers now and see how, whether that kind of a slowdown is sustained or if things will improve. I think you see, so far as the MPC is concerned, so far as the RBI is concerned, as early as February MPC, we had recognized that growth momentum, particularly investment and consumption, they are slowing down, and therefore we went for a 25 basis point rate cut as early as February, and we have kept that pace all through. So we did expect growth to slow down in the in the current year, and we had also said that growth is losing traction. And growth needs to be growth has to be the matter of highest priority. That's what we said in August. So from RBI side, so far as monetary policy is concerned, it has a particular defined role in the economy, and there RBI will do whatever instruments it has at its disposal. But so far as the other wings of economy, the other stakeholders and policymakers are concerned, I think everybody has a role, and the 3 rounds of announcements made by the government in automobile sector, real estate, exports and few other sectors, I think that they should play a positive role.
So in hindsight, now that we have the GDP numbers and we've seen the slowdown, did that 35 basis points cut, which at that time seemed almost very generous, does it now seem inadequate?
You see, this is
with hindsight, of course.
You see, this is what I want to say. We did, and in fact, for the first time, I think in August minutes, we said that growth is a matter of highest priority. Right. And in my minutes, I had said very clearly that it can no more be business as usual, and the economy needs something more. So therefore, we knew that there is a definite slowdown in investment and a slowdown in the contraction in demand. So we had recognized it, and therefore we went for 35 basis points. It is hindsight for others, but we knew that the growth will be very slow. But I must say 5% came as a surprise. I cannot have any pretensions about that. But we knew that growth momentum is slowing down, and therefore 35 basis points rate cut was necessary.
So if at that stage you felt 35 was necessary, now that things have become worse, would it be even more necessary to be even more expansive?
No, that would be a giveaway so far as the next MPC is concerned. I can't. I would not like to.
Okay.
Many things happen all around all around the world. For example, the Saudi oil crisis, this drone strikes have come. They are having an impact on oil prices. We have to see whether whether this impact, how durable it is likely to be. and what is the countermeasure in terms of substituting that shortfall in supply, what is the countermeasure or other kinds of contingency measure which Saudis will take, the US will take and the others will take to sort of dip into the oil, the reserves that they have, to substitute it by alternative production. So all that roadmap will play out in the next 1 week or 10 days.
So you will not let any cat out of the bag?
No, I will certainly not let the cat out of the bag. It's a privilege issue.
Absolutely, except that Governor, in December when the MPC met, that time they reiterated, they kept the repo rate at 6.5 and said calibrated tightening. In February, just 2 months later when you came, you got them to cut, change the stance, and since then we've seen successive rate cuts. So how did he do this? How did you change the MPC hawks into doves? What's the secret? And does it also mean that the governor still matters, the personality of the governor still matters? Because even though he has only casting vote, you are able to do this dramatic magic.
No, you see, personality of governor I would not like to say, but the governor Reserve Bank, whoever it is, whoever occupies the chair, the governor of the Reserve Bank, his assessment of the situation, the way he looks at things, it definitely carries a lot of weight. In the February MPC, we had considerable internal discussion and the signs of slowdown were clearly visible even as early as February. So therefore, after detailed discussion, in fact, just to tell you that we didn't require it, but I was prepared to use my casting vote.
Okay.
But we didn't need it.
So your powers of persuasion are very strong.
But no, not my powers of persuasion alone. I mean, it was a joint,
Even
joint decision.
Patra.
Let's not discuss individuals.
Okay.
When facts change, the views have to change. So in February, the facts had changed. In December, I think they had, to be fair to the December decision of the MPC, I think there were reasons why they did it. So it's not correct to sort of say that the December decision was not, was wrong.
And I'm not saying it's wrong, because in the governor's view matters
but there
much
were
more.
The facts and circumstances warranted a stance which the MPC took rightly in December. By February, more data, more facts had come, had come to our notice, and the slowdown signs were clearly visible at the cost of attracting some amount of criticism that, now the RBI is sort of, playing to the gallery and all kinds of remarks. The MPC did realize that there is a slowdown round the corner, and in order not to be behind the curve, we thought it was timely. And in fact, if you see the MPC minutes, the minutes said that minutes or maybe my statement, we had said that there is need for decisive policy action. Sure. So we didn't want to be behind the curve. So therefore, from February onwards, we have been cutting by 25 basis points. And last time, very clearly, we had articulated that it cannot be business as usual any longer, and the economy needs a stronger push. And
since then, things have become even worse. And so you've shown a very willingness to be unconventional with that 35 basis points cut. So can we assume, or can we hope that you will continue to even live up to that same trend and maybe have an out of MPC cut? Is it possible? Because as per the new regime, the MPC is required to meet 6 times a year. There is no requirement about periodicity. So can that unconventional way of looking at things extend to having an out of policy cut?
No, what will happen in future, what we will do, I cannot, I cannot sort of oblige you, or I cannot give a forward guidance on that. But again, let me also say that a lot depends on the incoming data. And monsoon has been good. Earlier it looked as if there will be a deficit. Now monsoon is surplus by 3%. And there is a deficit rainfall only in the eastern and the northeastern part of India. Little bit of shortfall in the northwestern part, but there is again forecast of rain in the coming days in Rajasthan, Madhya Pradesh and other places. So that data.
So you're seeing some silver linings, you do
There are silver linings.
Okay.
Then, as I mentioned, the impact of the Saudi oil crisis on international crude prices and what impact they have on our domestic oil prices and what impact it's likely to have in inflation. All these things will have to be taken on consideration. But we had said in the last meeting that growth is a matter of highest priority, and I think that on that there is no
Doubt at all.
There's no doubt about that.
There's been a lot of demand that monetary policy should do the heavy lifting. In fact, we've heard the FM and everybody talk about monetary policy, doing the heavy lifting. But as we've seen from the ECB, where Draghi has clearly said that monetary policy has its limits because it's much more broad brush. You can make loans cheaper, but ultimately demand has to be there. So, in fact, Draghi has said now is the time for fiscal policy to take over because monetary policy, beyond a point, it's like pushing on a string. Has the RBI expressed this view ever to the government? Because the government seems very determined to stick to that 3.3. So are there any limitations to monetary policy?
2 points. Number one, the situation in Eurozone situation, the Indian situation, the EME situation, I think they vary from place to place. But world over, I think if you see, almost every central bank is in an accommodative mode now. And RBI was perhaps one of the first central banks which changed its stance to accommodative and which went on an accommodative mode by cutting interest rates. Now almost every central bank is on board. Draghi has also done it for the European Commercial Bank. Now so far as the Indian fiscal situation is concerned, we do have lot of discussions with the government. Internally we do have lot of discussions with the government, and there is lot of exchange of views, exchange of there's a lot of discussion and deliberations which take place. And on the fiscal, as we stand at this point of time, the tax numbers are coming in, and so I think government is also assessing, reviewing the incoming data with regard to the tax numbers. And that is also simultaneously there is a need for government to maintain the capital expenditure which is there in the budget, and I think there was a review in government also to sort of ensure that the capital expenditures are front loaded to the extent possible. So therefore, that discussion with the government is a continuous process. Now whether the other part of your question that what should be the, how much of heavy lifting RBI can do, whether fiscal should not, RBI, the monetary policy can, I would not like to say monetary policy has a limited role. I would like to say that the monetary policy has a certain role in any economy, and RBI will play that role as per the requirement of the situation. Now in the current situation, every stakeholder, every policy maker will have to sort of deal with the situation to their best, whatever space they have. Now when I say stakeholder, it also includes the private sector players, the investors, or let us say the NBFC players, who have to find market-based resolution for their problems. They have to go for stake sale, they have to go for, they have to find market mechanisms to deal with the situation. So far as authorities are concerned, all regulators, not just RBI, other regulators also need to deal with the situation without, let me make it very clear, without diluting the essence, the fundamental principles of financial stability. Everybody has a role to play. Government, 3 rounds of announcements they have made, and I think government is also alive to the situation.
Governor, there's a constant call for RBI to lower interest rates, but the RBI also has to balance the interests of depositors and borrowers. So because unless you have deposits, the banks will not be able to lend. So are we somewhere losing sight of that? Because there's constant call, if you go by Taylor rule, etc., there's a call for lowering interest rates by say 200 basis points, 100 basis points. But what does that leave the savers with? Because we can't compare with the ECB, because in Europe and other countries, it is not the retail saver who provides banks funds. Their banks go to wholesale markets. So how does RBI hope to balance this interest of the savers and that of the borrowers?
No, you are absolutely right. It's a very delicate balancing that we have to do. Now with regard to call from outside to cut your rates by 200 basis points or 100 basis points, one thing I can tell you that our eyes and ears are open, but we take our own decision. So we do listen to people, everybody who suggests a rate cut of 100 or 200 basis points. We listen to everybody very carefully, but we take our own decision, and it is a balancing game. We have to look at the interest of the overall economy, rate cut, the aspect of transmission, or what impact it is likely to have on whether whether we should not be again cutting rates when there is a build up of inflation, because that is our primary target. We have to also, you are right, keep in mind the the depositors' interests, and in India many salaried class people, many retired persons, they depend on their bank deposits. So what we have now done as a part of our external benchmark is that we have left the entire process of spread to be decided and determined by the banks themselves. Earlier the MCLR was too prescriptive. Each component of MCLR was prescribed by the RBI, and the banks were told this is how you should work out on MCLR. Of course.
But you've still specified the external benchmarks, no, Governor, whereas normally competition and free entry, because now banking is virtually free entry, licenses are available on tap. So why not leave it to banks? Because in the process of telling banks how they should price their loan, in fact, I would think, has the RBI in fact done this mainly because it wants to ensure monetary transmission, without overlooking the fact that maybe we turn the clock back, because pricing is a very integral part of a banker's skill. So is it not akin to telling an automobile manufacturer that you price your cars regardless of the cost of your inputs, because the cost of deposits in India, the Indian situation is quite different from banks abroad. So have we somehow lost, in our pursuit of monetary transmission, have we lost pursuit of the fact that we might be taking away from skills that bankers have learned very slowly over the years? And bankers, public sector bankers are quite happy, because if their NIM shrink, ultimately you have the hapless taxpayer to come in. And private sector banks will find their own way of making good the difference. So has the RBI in its...
No, I'll tell you. I mean, let me complete my reply to your earlier question.
I'm sorry I interrupt, because I only want to kind of cover so much ground.
I'll complete my reply to your earlier question, then I will deal with this external benchmark matter and the points which you are mentioning. Depositors' interest. This time the spread, it's to be decided by the banks. And we have therefore, contrary to what some people expect and write, that should you not have a benchmark, external benchmark on the liability side also. We have not gone into that, because we have left that flexibility entirely with the banks. So the spread has to be decided by the banks. What are the components of spread, how much they want to load on that, it's left entirely to the banks. There is total flexibility. So therefore, to that extent, the current system compared to MCLR is much less of micromanagement and gives complete flexibility. Let me complete, please let me complete. Sure. So it is for the banks to decide. All that we have said is that once you decide your spread, then whenever there is an external benchmark, you link yourself to any external benchmark, not necessarily the repo rate, then the transmission becomes much more transparent and much faster and better. Now, so therefore, in the current system, the banks do have room to take care of the interest of the depositors. On the other side, the transmission will become transparent, and the other thing is, now what we have done, it applies to both the new loans as well as the existing loans, and this places both public and private sector banks at a common, footing. Old loans are also taken care of. After all, let us remember that when we do the rate cut is to revive growth. Now, rate cut is to revive growth by giving a boost to giving a boost to demand. Now, how does that happen unless transmission takes place?
But the means is as important as the end, no?
Let me complete. So therefore, the transmission is very important, so that monetary policy has an impact on the real economy. So far as the independence of banks are concerned, the flexibility of the banks are concerned, I think the current system gives them much more, it is much more flexible. Only thing is, it is much more transparent compared to the earlier system, and we are not telling the banks how much spread they should have. It is for them to keep their spread, taking into account their liabilities and their outlook on liabilities.
Except, Governor, that by specifying repo as one of the benchmarks, the repo is essentially an overnight market. So which is why we have today the SBI chairman saying that, can I give housing loan at fixed rate initially? Because I cannot possibly link a 30-year housing loan to a one-day repo. It's going to create so many problems. I think repo, I have my problem only with repo.
We have nowhere said that you link it with repo.
But it's one of the
options. And let us also see this external benchmark. Let me add two more points. There was a committee which was appointed in RBI in 2017. Right. The report of the committee was placed in the public domain. Comments were received. RBI's response on that was uploaded in the website, I think in February of 2018. It was announced in December MPC. When I came, banks had represented that they have certain difficulties. So therefore, we had deferred it. We had said that we are deferring it and we will review it further. If you see over the last 1 month before we announced the external benchmark, already many banks had announced linking their new loans to the repo rate. So it's a process which had already commenced, And last month in an event, while participating in an event in Mumbai, I had said that now the time has come to formalize what is already happening. So the banks were already linking their new loans to the repo rate. All that we did was to formalize what was already being done by the public sector banks and some private sector banks. Some private sector banks had also announced it. So the time had come to formalize that arrangement, and we have, by adopting the external benchmark, we have formalized that arrangement. And let me say that under this system, the transmission will be much more transparent, will be faster, and the flexibility and autonomy of the banks is entirely available to them with regard to the spread they decide to have. And you mentioned about some problem which they are having, that how does he link a 7-year loan to a 1-year one day repo rate. We are not saying you link it to a 1-day repo rate. We said any other benchmark which is published by the FBIL. Despite that, if the banking sector, if the banks have some problem, we have a very close interaction with the banks. In fact, it's a very close interaction and discussion and dialogue goes on with the banks, both public and private sector. If the banks bring any specific issue to our notice, we will certainly deal with that.
Yeah, except the banks are always really reluctant to kind of, pick up an issue really with the regulator.
No. You please ask the banks. Okay. Please ask the banks whether today they have. You ask them
that I will
whether
concede.
they have any difficulty. Before, yes. No, I don't want to be comparative.
Yeah,
let's not compare. But the banks do meet the deputy governors. They do meet me from time to time in group, and individually they also meet me. Any problem they have, we are always open to listening to them, and whatever is the difficulty, we are willing to address that.
Slowdown, which everybody is very concerned about. At the time of the last MPC, you had said that you thought it was more cyclical than structural, whereas people like Ratin Roy have said it's structural. It's purely a matter of how you see it. But do you still see it as more cyclical, where anti-cyclical measures can help, or do you think we need to do more? And the kind of packages the government is announcing, are they the right way of going sectoral approach, or do we need a broad brush, more macro loosening? Which is that what you would think as RBI?
You see, if you recall, you were present also in the last post-MPC press conference on 7th of August. You were there. What I had said at that time, and what we have again reiterated in our annual report, is that at this point of time, it appears to be a soft patch which has morphed into a which has morphed into a cyclical slowdown. Nevertheless, there is need for structural reforms. We did not want to categorize the situation as counter-cyclical, structural, because if you try to fix it into specific pigeonholes, then your policy response gets fragmented. You need to deal with wherever you feel there is a cyclical issue, you have to deal with it in a counter-cyclical manner. Wherever there are structural corrections needed, you have to do structural measures. So therefore, the responses at the current point of time have to be both cyclical and structural. And structural would issue things like reforms in agricultural marketing. For example, that is one example which I have been always saying, and I do have reasons to believe that something positive will happen in this direction also.
So the government's packages, we've seen 3 of them. Was the RBI consulted in these packages, particularly as far as mergers were concerned?
You see, wherever required, I'm not saying specifically with regard to merger or this thing, wherever required, and even otherwise also in matters relating to economy, lot of interaction goes on between the government and the RBI. And these are mostly obviously not in the public domain. Lot of consultation, lot of dialogue goes on between the government and the RBI.
But except in the matter of mergers, for instance, the government has been very generous in front-loading its recapitalization. But the timing, whatever the merits of merger, I'm not getting into that, but the timing of the merger, has it somehow been a little ill-timed, given the fact that you're giving so much money to the banks, but the top management of the banks will be, almost all the energy will be spent on ensuring that the merger goes through. So would you have been able to convince the government, or do you feel the timing was right?
You see, on the issue of merger, it's very important to manage the transition process, because in the intervening period, the normal activity of the bank, whether it is with regard to sanction or disbursement of credit, or it is with regard to recovery of loans or any other matter, I think the transition process has to be non-disruptive, has to be very smooth, and each bank internally, I would like to emphasize, each bank internally should have its own mechanism to see that the monitoring of the transition process is done very carefully and the transition is non-disruptive. And I think they have also, the government has announced that banks will have their own internal mechanisms to deal with this process. So that is important. How do you deal with the transition process? Naturally, when you are doing a very big change, the transition will have to be managed.
So was it seen as urgent, that the merger was something that had to be done here and now?
I think it was already announced by government as early as 2014.
That was announced in the Narsimham committee, came back so many years ago.
In 2014, it was announced during the Gyan Sangam, I think it was announced that eventually government is looking at about 8 or 9 large public sector banks. So I think it is broadly...
So on the matter of public sector banks, I think public sector banks generally look up to the RBI to kind of fight their case, quote unquote, as it were. And they've talked a lot about improving the governance. But on the one hand, we're talking about improving of governance of public sector banks. Second, on the other hand, we're talking about mergers. We're telling them give 59-minute loan, open Jan-Dhan accounts. Is there some kind of disconnect that, you know, are we serious about governance reform? We as in government or Reserve Bank also I would include, because as I said, I look at Reserve Bank as the keeper of banks.
You see, Reserve Bank as the regulator of the banks will always take the action that it is assigned to it, will always play the role that it is assigned, that is assigned with, in terms of regulating the banks effectively, maintaining their stability, dealing with overall financial stability of the system, including that of the banking sector. So the Reserve Bank will continue to play its role. Now, whether too many things are happening simultaneously or they should happen sequentially, it's a decision which the government takes. And so far as the large banks are concerned, I think in the long term and also in the medium term, the large banks definitely will be in a better place to mobilize deposits and also to play their role in the sector. Now take the example of, you have a south-based bank which gets also, it gets a bank which is based in eastern part of India. So therefore that bank would be able to get deposits from eastern part of India, and it has got a more national presence. So therefore larger banks definitely have greater leverage to play their role more effectively. It also helps stability of these banks. Small banks have their own problems of long-term viability also. So I think therefore the process of merger which has taken place, in any case it was announced earlier, and all that government has done is to implement it. But so far as RBI's role is concerned, we will play our role effectively. Governance reforms, we have already discussed this with the government, we have given our suggestions to the government, and I do expect.
But the government does not seem to be listening to the Reserve Bank.
No, I think the government has, the finance minister made a statement that in her announcement, I think not the last one but the previous one, I think the finance minister has said that the focus will be also on governance reforms. So the details of those governance reforms I think need to be spelled out.
Except that you must suit action to words. Well, of course this is not the government is saying one thing and doing something else. But now I just want to shift again to one of the real learnings from the global financial crisis, sir, really was that the linkages between banks and non-bank players should be kept strictly as much under control as possible. So which is why by and large worldwide these linkages were reduced. Whereas we seem to, on the other hand, trying to, RBI seems to be saying that because we are worried about what will happen if an NBFC, if it were to implode, we're telling banks that you will continue to lend to NBFCs, you're increasing the risk exposure. Is that the way to go? Because banks ultimately are very different kettle of fish. So should we discourage banks from lending? In fact, one of the alarm signals that the RBI did not pick up in the past was that the increased NBFC lending was a sign to worry about, which RBI did not pick on in time. So now are we repeating the same mistakes by encouraging banks to increase rather than decrease the linkages?
You see, we are not asking anybody, I can assure you, the RBI is not asking any bank to lend or not to lend.
You're making it easier for them to lend to NBFCs, yes, increasing the exposure.
We are doing more to harmonize our regulations. You see, you have to see that RBI exposure norms had been, the Basel requirement is 75%. we were at 125%. Before that, we were at 100%. So 100% had been increased to 125% in a certain situation. And today we have brought it down to 100%, although the Basel requirement is that it is 75%. And while providing all this enabling framework in all our interaction with the banks, when I have interaction with the banks, or when our supervisory teams also, supervision teams, they visit the banks, whenever they go for on-site supervision, this aspect of credit appraisal, whether the credit appraisal in individual cases, the large cases are being done correctly or not, the importance of the role the management committee has to play, the role the audit committees in the banks have to play, all these things are always highlighted. So far as RBI is concerned, our highest focus while providing an enabling framework to banks, at the same time we should not have artificially difficult regulations. We felt that today there is the need to bring down exposure on certain category of loans from 125 to 100. So we brought it down. It doesn't mean that we have compromised any principle of diligence. We reduced it to 100 because Basel is still at 75. So we are still very much ahead or above the prudential norms.
So can we hope for further reduction? Because many of the Basel norms
are excessive. No, I'm not saying that we will give.
Continue,
and in many cases also, we do not give. For example, in the case of the exposure of banks to NBFCs, a single NBFC, we increased the exposure from 15% to 20%. But we have not said that with the permission of the board you can take it to 25%,
True, but from
which is there for other
sure,
entities.
Yeah.
But for NBFCs we have not done that because we felt that at the current juncture increasing from 15 to 20%, because this also helps the good NBFCs to get the money. Today, as we are talking here about NBFC crisis, let us remember that there are good number of NBFCs which are doing well and which are able to get money from the market at pre-ILFS crisis rates. So therefore, there is a requirement to put money into the NBFC sector. So therefore, we increased it from 15 to 20%, but did not give that leverage to banks that with the permission of the board they can go up to 25%. So RBI does a very calibrated and careful regulation without compromising the basic the macroprudential requirements.
As far as supervision is concerned, regulation is one thing. In the matter of supervision, in fact, the Supreme Court had pulled up the Reserve Bank of India for the quality of its supervision. And that was when...
No, Reserve Bank did not pull up. I thought the Reserve Bank, we were pulled up by the Supreme Court on the RTI issue.
No, not only RTI. So there were some comments made by the Supreme Court judges on the quality of RBI inspection. How did it escape? Something to that effect. I can send you the link if you wish. But so my question is, when we had only limited number of banks and supervision was stretching the RBI's supervisory capacity. You take on the supervision of NBFCs also. So are you worried about, I know you're kind of forming a special cadre and all the rest of it, but that will take time. So is it not better to kind of supervise few entities which have systemic, more direct systemic influences and supervise them well, rather than take on a whole lot of NBFCs over which you have much less capacity, supervisory bandwidth?
You see, we are doing one is, as you have mentioned, we are creating a separate supervision and regulation cadre within RBI. We are also deciding the strategy how to go about this supervision. In any case, even before the formal legal, the formal amendment to the law giving power to RBI with regard to regulation of, let us say, with regard to regulation of the housing finance companies, or with regard to some additional powers with regard to NBFCs, we had already started as a regulator, we had already started supervision of top 50 NBFCs, and these top 50 NBFCs account for 75% of the loan outstandings so far as NBFCs are concerned. So the focus, we had already started the process, and these additional powers were considered necessary, so that what we had already started with regard to, by supervising these top 50 NBFCs, to implement what we want to thereafter, after the supervision, we got these additional powers. Today, you have the interconnectedness between banks, NBFCs and other financial sector players including housing finance companies. Given the kind of interconnectedness that you have, it was necessary for RBI to have powers with regard to NBFCs almost on par with that of the banks, and also RBI to have regulatory powers before
since resolution of NBFCs, whether you talk about ILFS or Divan housing, is proving so problematic, is there any prospect of the FRDI bill coming back onto the front burner? Because we have no resolution mechanism for financial entities.
FRDI bill, I mean specifically with regard to FRDI bill, the government has already said that it is withdrawn. So I don't want to comment on that. That's a policy decision which the government has taken. But having said that, I would like to say that there is need for a, there is need for a resolution mechanism which has, so far as NBFCs and similar entities are concerned, there is need for a resolution mechanism which has a legal background, which has a legal basis.
Sir, in the past, RBI had made this argument that their powers with respect to public sector banks are not comparable with private sector banks. But as we've seen, private sector banks have not fared very much better. In fact, we've seen a bank like Kotak Mahindra openly defying the RBI. I think RBI had imposed a penalty on them and they went to court over it. So does RBI at some stage feel that it's not being taken as seriously as it used to be taken in the past? What is the position?
No, RBI is taken very seriously by the banks, whether public sector or private sector banks. RBI imposes fine on
has Kotak paid?
Everyone. Yes, of course. Okay. Individual cases I would not like to discuss, but wherever we have levied penalty, the penalties have been paid. I don't want to reply on a specific case which you are saying. It's not proper.
But this again
but wherever penalties have been levied, they have paid. Now, we look upon them as, you see, it's basically, RBI's, so far as RBI's words are concerned, RBI's regulations are concerned, they are taken very seriously by the regulated entities. So therefore, it's not correct to say that somebody is defying it or somebody is not listening to that. So that is number one. And with regard to the RBI, sort of regulating the entities, the public sector or the private sector banks, I think the RBI, so far as private sector banks are concerned, our powers are more. With regard to public sector banks, we do have certain limitations. But I don't see that as a limitation in doing from the regulatory perspective. I don't see that as a limiting factor in anything that RBI wishes to do, because what we can do directly with regard to the private sector banks, RBI can do it through the government. Supposing we want a particular, a chief executive or somebody to be replaced, if RBI gives an indication to the government, I am sure the government will act upon it.
When can we expect to hear something on the Lakshmi Vilas Bank and Yes Bank, India Bulls merger?
You see, individual cases I don't want to comment on individual applications. Whenever a banking license is received, RBI does, as you would be aware, a fit and proper test. We analyze it from the perspective of fit and proper criteria, and it's a very rigorous process because banking license is a very important, it's a very important and sensitive matter. So therefore, RBI does a thorough check of whether the applicant meets the requirement of being fit and proper. It does take time. If you look at past cases also, they have taken even longer than what we have taken at present. But individual cases, I don't want to
certainly, sir. In fact, I think it's the reason why I'm asking is that because now a lot of fintech companies, they have gone through a lot of cash burn, and there are reports that many of them are hoping to get maybe a small finance bank license or some other license. So does it seem, we saw in the past DFIs, then we saw NBFCs, now we're hearing of fintech players. Does it seem as if everybody thinks that getting a bank license is a sure way of getting out of trouble, as it were, quote unquote?
What they are thinking, I don't know. But RBI will continue to apply the principles of fit and proper, criteria very carefully, as it has done in the past.
Just a quick question, sir, on IBC. Is the RBI disappointed with the way IBC is panning out finally? Everything seems to be landing up in court. We've seen very little resolution, really. And whatever little resolution is happening, it seems to be through liquidation rather than resolution. So is the RBI going to advise the government that maybe that 29A, the kind of relaxations are allowed, is there a case for a rethink?
You see, the liquidation numbers are larger because when IBC process started, many cases which were already in BIFR and which had almost outlived their existence, they got they got transferred to the NCLT and they got liquidated. So large number of liquidation cases are basically legacy cases which were transferred from the BIFR to the NCLT. Now under the IBC there has been delay in a number of cases, and in fact it should be faster. Government has amended the law now prescribing 330 days, but I was looking at the statistics in fact recently, and top about 50 cases when we looked at them, we found that more than 20 of those cases were have already taken more than a year, some of them even going almost up to 2 years. Now that is definitely a matter of concern, and
because in fact Anurag Thakur has, I'm sorry to interrupt, Anurag Thakur has recently said, telling banks, please don't send every stressed asset to the NCLT. So I think in government also perhaps there is a realization that they might have been some overreach.
I won't be able to comment on that, but there is a delay. Now there are various reasons for it. Now the stakeholders, the interested parties, they exercise their right to go to the constitutional, to go to the courts. Now you cannot take away that power. The Article T226 is a key component, is a fundamental component of our constitution. You cannot take away that power from anybody. So the operational creditors or some other creditor or somebody goes to the court. You cannot take away that right. So they do go to the court. Now the courts also, they do their hearing. Then some of the cases do take time. But having said all this, I think there is, the cases need to be, there is no two opinion that the cases need to be resolved faster. And in the past we have seen some cases where even the Supreme Court has heard the cases at on a fast track mode and have given out the judgments, given out the orders. So it is necessary to sort of fast track all the cases by all the by all the players concerned.
So on the issue of sovereign bond, for some time the talk went to the back burner, but recently we saw the Prime Minister in fact talk about the need and how important a sovereign bond would be. Has the RBI's position in any way, whatever the position was, has it undergone any change?
What we have conveyed, I think I said it earlier also, on as the debt manager, we have conveyed our views internally to government. Whatever we wanted to say, we have conveyed. But what the Prime Minister said, I think I don't know if we are referring to the same one.
He said.
The Prime Minister did not refer to sovereign bonds. The Prime Minister said that there is lot of money available.
Liquidity is available, and it's an opportunity for us to tap.
That's right.
Right.
That's right.
So should we interpret it as sovereign bond or
no? Interpretation is yours. But I just wanted to put the record on straight. The Prime Minister did not specifically refer to sovereign bonds. He said there is lot of liquidity available internationally, which we need to tap. It can be tapped through various routes.
Which is why
the ECB route we have.
Yeah, but is that wise, sir? Because
we have liberalized
ultimately,
quite a lot.
ECB route sounds attractive, but most Indians don't hedge. As a result, externalization has to happen. So excessive opening up to ECB also could be dangerous, no?
No, you see, again, let's remember that on ECB we have a cap. 6.5% of the entire 6.5% of the GDP. Now, as long as we have a macroprudential cap, a well-defined cap which we have arrived at after doing lot of analysis, and as long as you have space in that cap, any amount of borrowing within that is not an issue at all. And even today, for the short term, the hedging requirement is still there. For any borrowing which is 10 years and above, it is as good as a FDI. So therefore, the hedging requirement has been done away with there. So hedging requirement wherever necessary for short term, it continues. ECB liberalization is very much within that 6.5% of GDP. So therefore, macroprudential norms have not been compromised at all. But there is a liquidity in the international market, there is an appetite domestically, so we should provide the link.
So one advantage that you have really vis-a-vis many others or predecessors, that you handled many of these issues when you were in finance ministry. But the fact is that today you are in the Reserve Bank of India. So being on this side of the table, do you have now a greater empathy, as it were, for the Reserve Bank of India's position than you might have had when you were in the finance ministry, say on the issue of demonetization, where you strongly defended the government at that point of time? So today, do you find yourself a little bit more in empathy with the Reserve Bank of India's position?
I always, to the best of my ability, try to take a balanced call. wherever I am, when I was in government and even now when I am in the RBI, I always try to take a balanced call and to the best of my capacity, and I try to take what is good for the economy. And I am not influenced by the fact that I am coming from here or I am coming from there. I think that is
so
relevant.
Where you sit is immaterial.
It is material. It's not totally immaterial, but the final decision should be what is good for the economy. Not because I am sitting in government, so therefore I would like this, or I am sitting in RBI, therefore I should not like this. It's like what is good for the economy. I think that one has to take a balanced call. And being in the government and now in the central, I think one is in a position to take a more holistic position. And let me also make it very. Let me also mention, I cannot go into details, even when I was in government, on many issues, we were consulting the Reserve Bank very closely, and on many issues, the Reserve Bank's position.
You had appreciated,
It was appreciated and kept on board, and I think that has been the trend all along.
So would you agree with one of your predecessors, also a very seasoned bureaucrat like you, who said that the RBI is completely free within the limits set by the government?
I think you should ask the person who said this. I have a lot of respect for all my predecessors. I have a lot of respect. But there is something called the sovereign, and the RBI is not a sovereign state. The RBI works under the sovereign. The RBI has to exercise its, autonomy in decision making. That the RBI continues to exercise. Even today, let me assure you, that when decision making is concerned, the RBI is completely free and autonomous. We do listen to everybody, we interact with everybody, we consult all stakeholders, but final decision is ours and it is decided entirely by RBI.
So at night when you go to bed, are you counting your lucky stars that are not Jerome Powell, and at least whatever happens, nobody's going to call you a bonehead?
I try to get the sleep as quickly as possible.
It's been great speaking with you, Governor. Thank you so much for sharing your time.
Thank you.